chapter 4, but before we do that, I do want to go over the chapters 2 and 3 homework. So this is like your last chance, right? If you have the homework and you did not upload it, please do that right away. If you have it on paper, I'll actually just take a look at it. You're going to turn it on paper and do it. But I want to go over it, and once I go over it, especially the second problem, you're not going to be able to do it for credit after I go over it. So anyone else? Anyone else? You can always take a photo and upload. You can do that. You can do that. Yep. And I'll give you a minute or two. So listen, homework is easy points, right? Why is it easy points? Because even if you didn't get it correct, to give you a little green check mark if you did it, right? And then at midterm, I'll convert those green checks to points. And some of you will be like, oh, 100 out of 100, that's so wonderful, or whatever it is. And others will be, oh, 50 out of 100, and then you want me to let you go back and do the homework, and that's not happening. I'm very flexible with the homework as far as, not expecting it to be 100% correct and really just giving you points for doing it, because I need to make sure that, you're practicing. Otherwise, you're not going to, it doesn't translate well in exams if you're not practicing. Speaking of exams, next week's our first exam. And we're going to go through some of the chapter 4 material today. I won't get too far because we want to go over the homework. But I will, by Friday, actually probably before Friday, Wednesday, I am going to give you a handout that has a bunch of review problems on it. So it's going to cover everything that we covered from chapter 1 through chapter 4 and what I would expect you to know for the exam. The other thing that's on the exam, there are no multiple choice. But there is a matching section because there's a lot of terminology. So I'll talk more about that on Wednesday also. I will give you a list of terms. I think I give you a list of 20 terms, because there's a lot more terms actually if you go through each chapter 1 through 4 and you look at the glossary at the end of each chapter. There's a lot more than 20. So I'm going to give you a list of 20. I think I picked 15 to put on the test as far as the matching goes, but I will limit it for you to 20 so that you can focus on those terms. Okay. So that's just kind of a preview. I like to give exams on Wednesdays if I can, so we'll plan for next Wednesday. So that would be the 12th, right? February 12th is your first exam. Got it? Next Wednesday. Okay. By class time or Wednesday this week, I will give you the review. I will give you time in class to go over it or to work on it. We will go over it. I'll talk more about that too, what my expectations are for that. But I just kind of like to give you a preview, because the weeks go by very quickly, don't they? And before you know it, we're like, oh my God, I have a test tomorrow. So I want to make sure you've got plenty of time. Okay, so the homework, and again, I cannot show it to you up here because the only thing that works is the computer. So I can't switch to the document reader. So you had to do exercise 214, right, for homework, and exercise 3-6. So 214, listen carefully, I'm going to put it on the board. We're going to walk through it, I'm going to put it on the board. The homework problem, though, 3-6, I don't want to take too much time writing on the board. So I'm actually going to give you guys the solution on paper. And then we'll talk about it so you all have it in front of you, as opposed to me putting it up there because I can't put it up there today. Put a work order in for this, but Lord knows when that will, that'll get fixed. So we got to improvise. So page 85 of your book. Everybody should have a book, or at least be sharing a book. This is chapter 2. This is exercise 14, and there are multiple parts to this. So now's your opportunity to obviously take a look at your homework to compare what you did versus what you should have done, right? So let's read through. It says, Moody Corp uses a job order costing system with a plant-wide predetermined overhead rate based on machine hours. So this particular exercise, we went from direct labor hours as our driver to machine hours. At the beginning of the year, the company made the following estimates. Excuse me. So machine hours required to support estimated production was 100,000 machine hours. Fixed manufacturing overhead costs, 650,000. Variable manufacturing overhead costs per machine hour, $3. So number 1 says compute the plant-wide predetermined overhead rate, right? So know, and again, do I expect you to memorize? I do not. I expect you to go back in your notes though on the resources I give you. So this was basically y equals a plus bx over x, right? Isn't that what our plant-wide? Now, I could substitute terms, total estimated manufacturing overhead. That's our numerator, right? If we in dollars, right? Divided by some total estimated allocation base. Essentially though, what this is y, which is the equation of a line, or y is total cost, right? So that's our fixed cost and our variable cost added together. A is the variable for what? Fixed cost. B is variable cost per unit. X is the hours, in this case, level of activity, which is described as hours in this exercise. This is the same X, so this is hours also, right? So I'm going to substitute, right, with the information given in the problem, I'm going to substitute to find my POHR. So my numerator, in order to find y, what's A? Yeah, A is 650,000. Numbers here. B, $3, right? And machine hours, 100,000, right? And we're dividing by 100,000 machine hours. Okay. So you do the math. 650,000 plus 300,000, right, is 950,000. 950,000 divided by 100,000 machine hours is what? 950 per? That's a great question. I'm going to talk about that 1 second. Yes, you do. That's the short answer. Because it can be lots of things, right? It can be direct labor hours. It actually can be units. So you guys have to get in the habit. And that's one of the other reasons that I like the reviews that I give you in here, because I use the review also to kind of give you what my expectations are in exams. I need to see, right, that how things are being described. And so this is machine hours, which is different than direct labor hours, which would be different than units. Don't make me guess, right? So yes, that's a good question. So that's my predetermined overhead rate. Somebody translate that. What does that mean exactly? For every 1 machine hour that a unit requires, we're going to give that unit $9.50 of overhead. Word over and in time just followed. Sorry, overhead. Yes, that's exactly what it means. Okay. So, part 2 of the problem asks, if you're looking at the problem, where's it at? Okay. During the year, job 400 was started and completed. The following information pertains to this job. So direct materials total was given, direct labor cost total was given, and then it says machine hours used. So number 2 says to compute the total manufacturing cost assigned to job 400. Well, since I wrote so big there, I'll move it over here. So basically what I'm looking for, direct materials plus direct labor plus manufacturing overhead applied is what I add up to get my total manufacturing costs that were assigned. You agree? Okay. One person agrees at least. So direct materials is given, 450, right? No, I don't need to write that down. Let me do this. Okay. Direct labor also given, 210. Now what they give us with regards to manufacturing overhead, they just tell us how many machine hours are used. That 40 is not dollars, that's hours, isn't it? In order to find out how much overhead applied, what do I do with the 40? Multiplied by what? There we go. Multiply it by the $9.50 per machine hour rate, right? So what is 950 times 40? $380. Guys, do you have calculators? And if not, you should have them out. We'll plug in these numbers in. So you're not watching me write this stuff on the board does not put it in your head. Do it. You've got to do it. If you did it and got it right, great. But if you didn't, not only should you be writing it down, but you should be practicing, right? So Again, I go back to the translation of the explanation here. For every 1 machine hour, we're going to give the job $9.50 of overtime. This job required 40 machine hours. We're going to give it $9.50 for every hour. So 40 times $9.50 is $380. So that's how much. $380 is the amount of total overhead. And the total overhead was $950,000, wasn't it? So this job is only getting a little chunk, $380 worth. $950,000 is the total amount of overhead for the whole year. We divvy that up over all the jobs that take place throughout the year. So number 2, what's the total there? Total manufacturing cost. 1,040? Okay. Is everybody with me on that? You sure? Okay. If you have questions, please ask. All right. Number 3 says, if job 400 includes 52 units, what is its unit product cost? If you think about it, wasn't that the goal of chapter 2 from the get-go? I said, like, what's our purpose here? Our purpose here was to find unit product cost. So how do I do that? Bless you. How do I do that?
Just divide that by 52.
Okay, take the total manufacturing cost of 1,040, right? And divide by 52 units. And how much did it cost to manufacture? Oh, I don't really need a calculator for this. But it's $20, right? So each unit requires $20 of materials, labor, and overhead. Now, why do I care? Well, I care because of number 4, question number 4, right? What's question number 4 ask? Talks about selling price and markups, doesn't it? Are we awake out there? Okay, I don't know. I know it's Monday and all, but you know. All right, good so far? I need to know how much it cost me to manufacture the unit so that I know how much to want to charge, given how much I'd like to profit. So in question 4, the last part of this, well, we've got 2. If Moody uses a markup percentage of 120% of its total manufacturing costs, what selling price would it establish for job 400? So the markup, you can look at, I'm not sure I like the wording there. I mean, I know what they mean, but I think it could be tricky. So we'll see what you guys came up with. But a markup percentage of total manufacturing costs means you're going to mark it up an additional 120 on top of the original cost. So yes.
Are we using the 1,040 for that?
We are. We are. So, well, let me show you what the answer is, and then I'll ask you if you thought it was tricky, because in my mind, I was like, I think the wording's a little tricky here. So, again, it says they use a markup percentage of its total manufacturing cost, and the markup percentage is 120%. So if you take the 1,040 and you multiply it by 120%, and 120% is also just 1.20 if you want to do it that way. Someone tell me what you get. You get 1248, okay? This is the markup. So in order to figure out what I'm going to charge, what do I got to do with the markup? I got to add it back to the cost. So it's the 1,040 plus the 1248. So 2288 is what I'm going to charge. Were you confused by that?
I did like per unit, so I like did $20 times 1.20, and then I added that $24 to the original 20.
Yeah.
And I got $44 a unit.
Yeah, you can do that, because what I'm going to do here is I'm going to do this. And what do you get?
44.
Yeah, you're going to get 44. So you can do it either way. So, or you can take 20 times 1.2, right? Which was 24. And then you can take the 20 plus the 24, and you can get 44. Now, the question, and again, it says, what selling price per unit would establish? It does ask per unit. So you're like, well, why didn't I just do this? Because, I had to divide. It doesn't, you can do it either way. I do like to show you more than one option. If you wanted to see what the total was, this is obviously a little quicker, right? Because you're just working with the unit cost anyway. But in my mind, I was like, I feel like the way it's worded is like, you would have thought this might have been the selling price. Did anyone think that? So the markup is what's on top of your cost. So I guess you have to make sure you understand the definition of markup, right? The markup represents the amount you add on top of covering your cost. Does that make sense? So you could have multiplied this by 2.20, 220%, because the 220% would have added the 20 on again. There's a lot of different ways you can approach it. Does this make sense to you guys? Are you sure? Cost? See, bless you. Cost, markup, selling price per unit. I'm all about labels, right? Because as far as numbers, that's what I mean. Because it just helps you know where all your numbers came from. Because you start writing down a bunch of numbers on a piece of paper and you're like, oh no, I don't know what that number's for. I do that all the time. Like, I do that to myself. Number 5, I didn't, did you answer it? Anybody answer it? Number 5 says, if Moody hired you to critique its pricing methodology, what would you say? What do you think? Yes, go ahead, Jane.
You said I would do the percentage markup because you're obviously getting a lot more money out of it.
Yep. Do you think there's any critiques of that pricing tactic? What that means is like just 120% markup, boom, not done, nothing else. You're not considering anything else. What in real life? What might you have to consider? Say that again. Consumers and what they're willing to pay. Yeah. So how do you kind of figure that out?
Comparable markets.
What are your competitors charging, right? Yeah, I don't know that, like, just saying, okay, our flat markup is this, is a wise choice if you're not considering what other competitors are charging. Now, that gets a little bit more involved than we're getting in this problem, but these are the kind of things you have to start thinking a little bit more beyond the numbers. That's what I like to say, think beyond the number, right? What kind of implications just having this kind of policy on marking things up? Yes, Jane?
Did you use the 52 just because, that's an if job 400 includes 52 units?
Yes, it told me how many units that job was going to produce, and my goal is to get a unit product cost, which means I want to find out how much it costs me to make 1 unit.
On the test, did you specify how many units we're going to divide by? Because I was looking at the.
I would tell you. I would tell you how many. Yes. Yeah. I kind of if I'm going to ask you to find a unit cost, then I have to tell you how many units. There's no way you could just guess.
There's no good guessing.
No. You're welcome. You're welcome. Okay. So the other problem was 3-6. And so I know this is not ideal because, I like to look at things up here so we can all see what we're looking at together. But this is in its front and back. So you've got the first part of the problem on number 1, and then you flip it over, and then schedule a cost of goods sold. So let's go through the cost of goods manufactured, right? And if you have questions as you go through it, please ask. Also, kind of having this handout, like later on, if we don't have enough time here you really want to kind of look at it a lot closer later on, then you have this is kind of handy, right? You don't have to worry about writing it all down, right? So, beginning work in process inventory. And again, this problem was set up identical to problem 3.3, which I did on the board, in terms of, here's all the numbers, now put it in a statement, right? So we start off with, there's the 3-column format that I used when I did the problem. Beginning work in process, 10,000. Then you want to calculate the amount of direct materials. Now, here's what's different, is in the problem or maybe not in the problem I did, I don't think, okay, never mind, I'm thinking of my other class, cause I teach this, a more advanced, class of the same, and I'm in the same chapter. Alright, so direct materials, beginning raw materials inventory was 7,000, add the purchases of 118, that gives you total raw materials available of 125, deduct ending raw materials inventory of 15, direct materials used in production 110,000. Are we good there so far? Does anyone have any questions? I'll try to take this in just like chunks, okay? Questions? Right, then, direct labor was given, right? Yep, you like that, huh? Direct labor was given. Manufacturing overhead applied was also given, but you also had another number in there. It's a little different. It said actual manufacturing overhead was 80,000. You don't want that because you want the overhead applied. The actual we use later on. So your manufacturing overhead, your total manufacturing overhead applied to work in process was 270. So 110 plus 70 plus 90 is 270. You move that into the far right column so that it sits right underneath beginning work in process inventory. So far so good? So, beginning work in process inventory of 10,000 plus total manufacturing cost of 270 gives us total manufacturing cost of 280. You subtract ending work in process inventory of 5,000. We get cost of goods manufactured of 275. How we doing? And if you didn't get it right, don't panic. This is the opportunity where we look at what we did wrong and then we correct those steps in our head, right? Or in our notebook or wherever we got to correct it. Questions? All right, flip it over then. So then we continue and we now prepare the statement of cost of goods sold. We take our beginning finished goods inventory of 20,000. Here's where the connection comes then. We add the cost of goods manufactured. All of our financial statements are linked. Every number of a financial statement is used to prepare the next one that comes after it, right? So we add our cost of goods manufactured to 275, goods available for sale, 295. We subtract ending finished goods inventory of 35. That gives us, if you didn't use the word unadjusted, that's okay. I didn't use it when I wrote it on the board. We have cost of goods sold of 260, but then we have to say to ourselves, my manufacturing overhead applied did not equal my actual manufacturing costs, right? And I try to, sometimes I feel like this is a hard concept to wrap your heads around because it's not real time, and sometimes when things aren't real time, it's hard to kind of grasp, right? But the other day I put this on the board. These are expenses, right? These are expenses that are related to manufacturing overhead that aren't direct materials and they're not direct labor. When we incur them throughout the year, we debit this account. So these are our actual costs, right? And throughout the year, we apply to work in process based on that POHR, right? Which is based on an estimate. So in this problem, actual costs were 80, right? Applied was 90. They don't equal. They're not going to. This applied amount, we use an estimate at the beginning of the year, right? And so what's the difference here? Well, the difference is a $10,000 credit, which means we did what? Underestimated or overestimated? We overestimated or over applied, right? These types of expenses. So we want to reduce our cost of goods sold by the amount that we overestimated, because ultimately all roads lead to cost of goods sold, which is an expense. So that's the account that we will reduce based on the analysis of that. So we deduct the overestimated or overapplied overhead, and we get a new adjusted cost of goods sold amount of 250. You with me? Okay, now there was one other part to this problem, wasn't there? What was it? The income statement. And I told you did not have to do it, right? Hello? Yes? I told you you didn't have to, but maybe you tried, so let's see what we got here. So, okay, so, if you're looking at exercise, and again, I wish I could show it to you up here, but I can't, but in your book, page 132, page 132, because I'm going to put part of this up here. I didn't give you that on paper. All right, so page 132, this is exercise 3-6. I don't mind writing this on the board, it won't take long. This was number 3 was optional as far as the graded homework, but I do want to make sure we do it. So number 3 said to prepare an income statement. If you're looking at the problems, if you're looking at the problem data, I should say, you had sales, you had direct labor costs, raw material purchases, selling expenses, administrative expenses, manufacturing overhead applied, actual manufacturing overhead costs, then you had the beginning and ending inventories given. You should have said to yourselves while you were doing the statement of cost of goods manufactured and cost of goods sold, like, well, there's some numbers in here I don't use for either of those. Well, those are the numbers that we need for the income statement. So we have Mason Company, income statement. I don't know if there's a date, whatever. We know we would have a date there, right? And so our basic income statement, we have sales. Now we use the sales number, right? And that number was 524, correct? For those of you that tried it, if not, look at the problem. All right, now what do we subtract from sales? Cost of goods sold. Be a little more, yes. So we need cost of goods sold. Look, where does this answer? Where does this number come from? From what requirement? It comes from our solution from number 2, right? That you have in front of you there on the paper. So cost of goods sold was 250, right? You agree? Sales minus cost of goods sold gives us what? What do we call that? Gross profit. Does this look familiar, guys? Come on. Yeah, right? This is our traditional income statement, not the contribution income statement, contribution format. This is our traditional GAAP income statement. And then we subtract what here? Which ones? Yeah, and I just put S&A there, selling and admin, okay? So I'm gonna keep it simple. And those were 140, I'm gonna actually put them here, 140 and 63. And then I'm gonna do the total over here. Oh, I can add, guys, I promise. All right, and gross profit minus our selling and administrative expenses gives me net operating income. Of $71. So this number 3, as I said already, was optional, but now you can kind of see statement of cost of goods manufactured, statement of cost of goods sold, that number filters in here to our income statement. So, you know, I think it's good to highlight, I even brought a different color marker today. I think it's good to highlight this number, right, comes from that previous financial statement. All of our financial statements are linked. Okay, that's a lot, right? But it's good practice. Good practice. Questions before I start heading into chapter 4? Okay, so chapter 4, I kind of really pull out of there what I want to cover, and I don't cover everything, so that probably is good, right? But I don't know if you recall me saying, so let's think about how chapters 1 through 4 are all related. Chapter 1, introduction to managerial accounting and cost classifications, because that's where we have to start no matter what. We have to start with dumping all of our costs into certain buckets, right? So we spent a good bit of time on chapter 1. There's a ton of terminology in chapter 1 too, which I'll talk more about on Wednesday. Hopefully this is working by then and I can flip back and forth between the book and the computer. But anyway, and then when we moved into chapter 2, I said, okay, what we're doing now is we have this spectrum, right? And what kind of systems do we use to keep track of all of those costs that we talked about in chapter 1? So really what chapters 2, 3, and 4 are about were the different systems, and you could say software if you want, even though we're not really using the software, the different systems that we use to keep track of all of those costs that we learned about in chapter 1. So I said chapters 2 and 3 was about job order costing, which is very specific to what kinds of businesses. When do we use job order costing to keep track of our costs? When we have what kinds of products? When we're manufacturing the same thing or many different products? Many different products. Because every product is a job, right? Every product is a unique job. So if I'm working on 150 jobs, how many job cost sheets do I have? I have 150. If I have 3 jobs, I have 3 job cost sheets, right? What was the goal? The goal was to find, as we just did in exercise 214, unit product cost, right? How much does it cost me to make 1 unit? Or how much did it cost me to provide that one particular service? I go back to my construction company, right? How much did it cost me to remodel this person's bathroom? Okay? So when we get to chapter 4, we're going to look at the complete opposite end of the spectrum, something called process costing. Again, this is just another, there's so many different, it's almost like having, you know, how many different types of softwares are there out there for accounting. Process costing, as you'll see momentarily, is going to be used in certain kinds of manufacturing. It's on the complete opposite end of the spectrum, though, of job order costing. Our goal is still going to be to find, and I'll come back to that in a minute, a unit cost, okay? A unit cost. I'll just say unit cost for now so I can explain a little better, all right? I think I also mentioned when I was kind of talking about where this all fits, right? So our accounting, we have all of these different costs, right? And we learned all about those in chapter 1, right? And now we're talking about the systems that we use to keep track, to record and keep track, right? That's what chapters 2, 3, and 4 are all about. Most systems kind of fall somewhere here in the middle because most companies probably use a little bit of both. And I'll try to give you some examples. All right, I'm going to get right to it here with the time we have left. So, process costing. There are similarities, and this is the great part. You're really not learning anything new. There's one little tweak we're going to make. So both systems assign material, labor, and overhead costs to products, and they provide a mechanism for computing unit product costs. Our goal is the same. No matter what system I use to keep track of my costs, my goal is the same. I got to find a unit product cost. Both systems use the same accounts. No new accounts here, right? Raw materials, work in process, finished goods, okay, manufacturing overhead. And the cost flow is basically the same. So when I put on the board the other day, I kind of compared retail to manufacturing business, and then I drew some T accounts, right? You guys remember that? Okay, I'm probably gonna go back to that here momentarily. All right, so here are the side-by-side of when do we actually use process costing versus job order costing, right? So, job order costing, we already know this is a review on the left side. Many different jobs are worked on during each period, with each job having unique production requirements. Unit costs are computed by job on the job cost sheet. Okay? We know that already. process costing, a single product is produced either on a continuous basis or for long periods of time. All units of product are identical. Take a particular brand of milk, 2% milk, right? Don't all of the jugs look identical, 2% milk? All of the whole milk jugs look identical, right? They're red, 2% is blue, 1% or skim, I don't know, pink, something like that, right? They all look the same. If I put two jugs side by side, it'd be hard to tell the difference. That's process costing, okay? Costs are accumulated by department. Unit costs are computed by department. So my goal here is to find departmental unit cost. And I'm going to use T accounts to kind of make you guys see that. This is probably all the farther I'll get today with this little illustration up here. All right, so now up here on top, we're going back to job order costing. So this is a little review of T accounts because I like side by side or top down comparisons. That's just me. I'm a visual person. So we know that we had raw materials inventory, right? And we had work in process inventory. And we had finished goods inventory. And then all roads lead to cost of goods sold. Okay? To elaborate on that a little bit more, and if we're going to talk about debits and credits, even though we didn't actually do the journal entries, I like to keep track here, right? We said our raw materials, we purchased them, they were purchased, right? And when they were placed into production, they either went to manufacturing overhead or they went to direct materials, but nonetheless, we had direct materials, direct labor, manufacturing overhead, right? The work in process inventory account, let's see how much you remember. Maybe it's in your notes. I hope it's in your notes. What was the subsidiary for work in process inventory? Subsidiary for work in process inventory. The job cost sheets, right? You guys remember? This work in process, look, this is the total of all of my direct materials, all of my direct labor, all of my manufacturing overhead. The details are in the job cost sheet. So job number 1, I'm just obviously keeping this simple. Job number 2 and job number 3 had an individual record of the direct materials, direct labor, manufacturing overhead for each job. Yes? If I were to add these jobs, though, all up, what would they equal? They would equal, so look up here, guys. The direct materials for job 1 plus the direct materials for job 2 plus the direct materials for job 3 would equal the direct materials in the work in process account. Direct labor plus direct labor plus direct labor would equal the direct labor, right? So this is a subsidiary, which means secondary record. It's maintained somewhere else, right? It's kind of like if you were to look at your bank account right now and you had $200 in it, right? That's just the balance. You don't have the detail from the last week. You'd have to go look at the actual transaction list, right, to see all the details. So the subsidiary for work in process, don't forget that term, subsidiary, the detail, are the individual job cost sheets. And for each of these jobs, I figure out a unit product cost for each one. Each one, I figure out a unit product cost. We demonstrated that with exercise 211, or 214, I'm sorry, where I take direct materials plus direct labor plus manufacturing overhead. I get a total, I divide by the units produced, and I get a unit product cost. So if you go back and look at exercise 214, I think that you could kind of see how that works, right? So this is the subsidy. This is a secondary record. It's kind of sits below my work in process, right? Here's the flow of goods. You agree? Okay, now, that much you already know. This was chapters 2 and 3, right? Here we go, chapter 4, process costing. All the same accounts, no new names, nothing, right? Here we go. We have raw materials inventory. It's the work in process where things change up a little bit. I'm not producing unique individual jobs. Every unit is getting the same processing. Okay? Every unit is getting the same processing. So let's take, wait, I think there's an example. Hold on a second here. Yeah, so at the beginning of chapter 4, your book uses an illustration, two ladies that are open up a winery. Now, I don't know a whole lot about making wine. I'm not a wine drinker, not that I have to be to know a whole lot about it, but I just don't know a whole lot about it. So I would imagine, like, you know, the grapes, you gotta crush them, right? So if I was manufacturing bottles of wine, all the same kind of wine, each bottle would have to go through the same exact manufacturing process to be a completed bottle of wine. You agree? All right, so let's just say it's one kind of wine. What happens here, instead of individual jobs, I have different work in process accounts that each of my units have to pass through in order to become a completed bottle of wine. So for example, I'm gonna keep this super simple. I have work in process, let's call it the crushing of grapes, right? The crushing department. This is a work in process account. All right? So placed into production, these are units. I have my direct materials, my direct labor, and my manufacturing overhead. So all three of those are involved in the crushing process. When all the grapes are crushed, they're still not a bottle of wine yet, right? They got to be fermented. I mean, we do that here on campus. Again, I don't really know. So then they're going to move to fermenting. These units, right, when they're done in this department, when the grapes are done being crushed, these same units are going to move into the fermenting department. And all of those units will have to get fermented before they can move to, let's just say, aging. Okay, I know I'm missing steps, but I just trying to make a point here. So this is going to be the work in process aging department. So these exact same units, these are all the same units. When they're done in this department, they come here. Direct materials, again, all these same units. They have to go through crushing, fermenting, and aging. Once they're done in the aging process, they are finished goods. They're a bottle of wine. So this is my bottle of wine. Okay? And what do you want to do with your bottle of wine? Obviously, you want to sell it. So this is my completed units, or my bottles. This is a bottle. And when they get sold, where do all roads lead? Cost of goods sold. Okay. Well, I'm getting sloppy up here, huh? So, all roads lead to cost of goods sold eventually. What I do in process costing, my goal is still the same. What did I say we wanted to do in process costing? I got to find a unit cost. So look, I have to find a unit cost here. How much direct materials, direct labor, and overhead did it cost me for one unit to go through the crushing process? How much did it cost me for those units to go through the fermenting process, because there's different materials, labor, and overhead applied in each department. How much did it cost me for those units to go through the aging process? Because, again, that part of the process requires different materials, labor, and overhead. The sum of these unit costs is my total unit product cost. In other words, how much it costs me to manufacture a bottle of wine. Well, each bottle has to go through each of these different departments and processing, or it doesn't become a bottle of wine. You can't skip it. You can't go, oh yeah, I'm gonna go from crushing to aging. Not gonna happen. So get it, there's a process, right? A very specific process that gets applied to all units evenly across all of those departments. Now, there can be 20 work in process accounts, there can be 2. I just, I picked 3. I know there's more than that for wine, but I obviously didn't want to put any more on the board here. So look, I'm still calculating a unit cost, just like I did up here. But up here I have very distinct, separate jobs. Here, all my units are going through the same process. Yes? Yeah, once I find the unit cost in each of these departments, then I add them up, and that gives me how much it costs me to manufacture 1 bottle of wine. Because each bottle had to go through crushing, fermenting, aging. Yeah, so when the units, that's a good question. So look, when these units are done in the crushing department, they move into the fermenting. We move them out. Well, it's not the same price necessarily, so let's not add numbers just yet. We'll do that on Wednesday. So I want you to kind of just visualize what the process looks like between the 2 different cost methods. Okay? It is a lot. It is. That's a perfect statement. It's a ton of work. All right, guys. Thank you. See you Wednesday.